We have seen the structures for Bitcoin's market move and change quite dramatically over the last 24 hours. In this video, we're going to be jumping down into the technical analysis for BTC, taking a look at what's been going on here and what I think might be around the corner. There's a lot of kind of things to discuss, so as I get into this, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, stay up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. I don't think you'll be disappointed by what you find down there. Let's make a start with this one. There's a lot of things, as I said, to discuss. So let's start things off with some Elliott wave theory. So we were tracking a 5-wave structure to move to the downside. As I said yesterday, we would create an invalidation if we were to go higher than 21,971, which we obviously did. So we are no longer in this impulsive structure. So what I'm going to do is I'm going to clean this out. There are a couple of areas of concern that I have. Okay, so I'm going to go ahead and remove these ones, and I'm going to show you what my concerns are. A move up to the $22,000 area was always something that I've been talking about. I just didn't expect it to occur until we had finished that 5th wave move. But with that all being done, we can now talk about the obvious issue that I have with the current structure. So straight off the bat, by traditional kind of finance or people who don't fully understand market structure, a V bottom here would be a positive, right? And would look at that. Now, a V bottom with a cup and handle would be negative, but a V bottom in any other kind of way would basically mean market reversal and bullish movements, right? That's kind of what the, I guess, moon boys and just people who use trend lines are going to tell you. Market structure, though, tells us a slightly different and more kind of concerning viewpoint, and that is that we do not have a trend structure here in the same way that we didn't, way back either, right? We've been looking for these trend structures, something to this effect on this side, at the end of a structure, right? We want to see this kind of thing, this kind of 5-wave structure appear when we have a reversal, like a V bottom, but we don't. What we see is a very corrective pattern right here. This led me down the garden path of thinking, why did we go and do this V bottom, and what was really driving this? Take a look at the DXY, and you can see pretty clearly that DXY dropped down quite dramatically, which meant Bitcoin went up dramatically. Okay, understanding that you now need more dollars to buy your Bitcoin because the DXY basically drove the dollar value down. This is something very similar that you saw when you saw the USDC depeg, right? You saw the Bitcoin USDC pair and Bitcoin spike to the upside. It's because you need more USDC to buy your Bitcoin. It's the same when it comes to the dollar. If the dollar gets devalued, you need more dollars to buy your Bitcoin. Okay, and you can see that right in here as the dollar reacts negatively to news that is going on. People are dumping the dollar in favor of other currencies. Now, that brings me on to some interesting kind of thought patterns with what is going on with the structure here for basically the structure here for this move for Bitcoin to the downside. It's very alarming. So the first thing that I need to kind of consider is this move to the downside, right? If we think about the structure that is here, we have a very interesting corrective structure, okay? And that brings me a little bit of concern, only a little bit. It's nothing major, but we have got this kind of corrective pattern here. We then have a corrective pattern right here, and I'm going to just scale out this just a fraction, and we have a corrective pattern here now. Okay, now if I grab my fibs and I run the fib from this low level here to here, you just pull that on to here, there we go, and I pull this across to this level, we can see that we went down lower than the 1.618. Okay, now we have a corrective pattern going up, and this corrective pattern at the moment looks like this. Okay, now it probably has a little bit further to even go to the upside because I think it's a 335, meaning that there's a ending 5-wave structure right inside here. Okay, so I'm expecting a little bit further upwards before we can kind of finish this one off, but it is concerning because the next move from here would be a pretty big, in my opinion, 3-wave structure to the downside. And all of these things being strung together, the concern is that it's a 1, 2, 3, 4, 5 diagonal, and a diagonal in this particular position could be pretty lethal for Bitcoin. So be a little bit cautious here. Yes, it's great to see the news such as HSBC buying the UK arm of Silicon Valley Bank, so SVB Bank. For the UK aspect of it, HSBC has bailed them out. That is something that was brought together by the Bank of England. They purchased it for £1. Basically, they're just buying the liabilities, so they don't actually give money over. They just take on all the liabilities of the bank. And we can see that basically, yeah, the Federal Reserve and FDIC are basically going to make whole US investors, but this doesn't necessarily subtract from the fact that other banks are also starting to get shut down, such as Signature Bank and so forth. So there's a lot of things to kind of consider when we think about price action. What's driving the price action is the dollar, not so much the fact that there's a lot of demand coming in here. It's interesting, but it's not necessarily that. The concern that I have ultimately is all these kind of bailouts and made whole situations and banks going down are going to cause a bit of a ripple effect. We might not see it just yet, and it might just take a little bit of time, but all of this really comes down to the fact of 2020 overprinting fiat and now having to deal with the fallout of that. Raising interest rates to try to combat the inflation is going to cause more and more pain, and it's just kicking the can down the road. There's going to be a lot more of this, and unfortunately a lot of people are going to have to get wrecked in order for things to kind of get a little bit more stable. A part of all of these things that are going on are going to have to be a significant spike with unemployment in order to kind of capture things and get things back under control. I cannot imagine that operations are going to continue the way that they were. So when you see all these kind of takeovers, things like HSBC buying out SVB, or at least the UK arm of SVB, and then there's going to be restructuring that's going to have to occur in there. So don't expect it to be clean cut or anything like that, and you can just go about your daily lives like nothing has happened. That kind of shit doesn't simply fly. Now, ultimately, the structure for Elliott wave theory is concerning, but not yet proven. I would be a little bit concerned because we did come down here in a 3-3-3 action that has gone deeper than the 1.618 times that of the first three-wave structure. So if we were to try to think of this as a WXY, W, X, and Y, well, that Y is very, very deep and would be very unusual for it to not come back down. Now, if we do complete this as a diagonal, well, that puts us in a very, very difficult position because it would potentially be a leading diagonal where we'll be taking a look at a much deeper move to the downside. So although there's some positivity right now, again, I want to illustrate it isn't really driven from the demand aspect of it. It's not a bull market. People love to throw those words around. Essentially, the DXY's dropped down. DXY dropping down means Bitcoin goes upwards. Okay, we've seen this many million times already, and nothing there has really changed. So if we're thinking about this, there's opportunity. Okay, the opportunity would be in trading aspects of BTC and other cryptocurrencies as they start to get to exhaustion. We can see on the stochastic here that there is an area of exhaustion that is occurring, not just on these smaller timeframes either, also on the larger timeframes. Now, when we kind of talk about trading, if you haven't done so yet, why not check out BitGet down in a link in the description below. At the moment, they're running an offer to deposit 50 USDT and you can get cashback of 10 USDT. They also do deposit bonuses all the way up to $8,000, which you are not going to find anywhere else. So why not check that out? Linked in the description down below. We're also starting a weekly trading competition with BitGet where you can win up to $100 USDT, and check it out in our Discord server, also linked in the description below. Let's check it out. Some smart money concepts on Bitcoin here. Take a look at what's going on from the overarching structure. You can still see that we have a strong high. This is acting as our resistance at the moment. And this is also underpinning the break of structure that we saw as well. So this particular area, if we were to kind of pierce up above it, would potentially be an area where we see a break of structure or a change of characteristic to the upside, and we could see some short-term bullish movements. Now, ultimately, as we were talking about yesterday, we were expecting that slight move up higher. Did go, and obviously with all this fundamental stuff that is going on with banks and the dollar going down, we did of course see the change of characteristic and the break of structure to confirm our move upwards, but we have gone up a little bit higher than expected, creating those invalidations on the impulsive structure, but not the diagonal-based structure. Now, from the structure down here, the weak low still stands. Essentially, that's should give us a little bit of ground for concern, but if we do pierce the strong high, not only do we create the change of character to the upside, but we'll also convert that weak low into a strong low, at least temporarily. It might be that we end up with two weak lows for a small period of time. It'd be interesting to kind of see how that plays out. Ultimately, we left two fair value gaps behind whilst simultaneously filling all the ones that were left on the way down. Again, these are areas that I think we will gravitate back down towards and fill. So again, you're looking at 20k down here, for example. Ultimately, if we start scaling this even to a 4-hour chart, you can see that we're heavily overbought on this 4-hour chart. And we have a strong high, weak low on this time frame, and nothing much here has changed. We'd have to move up very significantly before we actually start to think about this as a change of characteristic to the upside. Now, ultimately, we had a bearish change not too long ago. Although we pushed up higher, this is pretty typical when you see these changes. You normally do go above this area temporarily before you go back down. So again, I think there's an opportunity for shorting. Not only are we looking at exhaustion on these time frames of the 4-hour and 8-hour, we're also right up there in the equilibrium area, the previous area of consolidation that was trying to act as support. We're right back up there. Is this going to be a double top kind of scenario, and are we likely to fall back down? I think as the US starts to open up and we're going to start to see more of a bank run over in the US, I do expect a lot more fallout in this. I think there's some short-term pump to the upside, pricing in some negative stuff that will happen later today. But it'll be interesting to kind of see how that all falls out. I think at this point in time, it is quite a difficult read, so we want to be a little bit cautious where we can. Ultimately, on the market structure side of things, if we jump to the 8-hour chart, we can see that we still have our big fair value gaps down in these lower areas. We're looking to kind of fill that out. Obviously, institutional buyers will be calling off and price will be coming back down. Ultimately, we are still in a reasonably bullish state, actually, from over here. So we still haven't really changed that characterization just yet. So it'd be interesting to kind of see how that one kind of goes and plays out. On the larger time frame, my biggest concern is how fast that daily stochastic RSI has moved. It is almost up in that overbought area, and then that lines up everything with the weekly being bearish, and we can start thinking about the next big move to occur. I think we are not seeing the momentum behind the price that is needed to think bullish. We have to think bearish because the stochastic RSI is moving far too fast to actually give us an indication that we are in a bull market that would be moving much slower with a lot more volume behind the price and a lot more momentum to the upside. A fast moving stochastic RSI shows the opposite. It shows low volume and it shows lack of momentum behind the price. So it's going to be an interesting day. I think we're going to experience a lot of volatility when it comes to Bitcoin and the altcoins, of course. So let me know what your thoughts and comments are down in the description, in the comment section down below. Really interested to canvass your thoughts and opinions. If you found this useful, smash that like button. If you're new, subscribe. And guys, don't forget to join us down in Discord. I'll catch you all in the next one.